But let's speak with Aashish Sommaiyaa and get a flavor of what really is the retail mood like. Aashish, hi, morning. Good to have you in the show. Hope all things safe, working from home.
Yeah, absolutely.
Okay, great. Good to hear that. So tell us, what exactly is the mood amongst the retail fraternity like? Are you seeing redemptions, or do you think the move up and down was both so quick that, people have just been left with eyes wide open?
Yeah, I mean, it has been a very sharp and swift, sudden kind of decline in a span of 3 to 4 weeks. And so far, actually, in my experience, whatever I observed of last, say, 3, 4 corrections over 20 years, compared to those experiences, I think this time around the retail or individual investor behavior is at a significant departure to the past. In fact, it's far more mature, far more circumspect, and far more stable. Yes, there is hectic activity in terms of reaching out to investors, conducting conference calls, and keeping people informed. So the communication has been amped up quite a lot. But on the other hand, I think flows are stable. I mean, I can't say that there is a huge bump up, but there's no significant deviation from what we've seen over, say, December, January, February, March. April is likely to be a slow month, but I have not seen any spike in redemptions really.
What about the lumpy money? Has that come to work at the lows, or was the fall that scary that even the lumpy money stayed away buying at declines?
There are a lot of conversations. There are a lot of conversations. People are definitely considering. So when I say that communication has been amped up, it's not just only clients who are invested and who are probably wondering what needs to be done. But even on the other hand, there are clients who do have money, who are on the sidelines, and to whom we are saying that this is not the time to just jump in lump sum. I think spread it over the next 3 to 4 months. But yes, this is a kind of decadal opportunity. Doesn't happen very often that you get the best of companies maybe 50% down, or the whole index 30-40% down. Also, I think one thing which people should keep in mind is that even before we got the first set of virus infection cases, or even before our lockdown started, our market was already down 35%, which means that we were falling more in sympathy with what happened in global markets. For example, in the Lehman crisis, it didn't matter who you were, every market fell 40 to 60%. And this time around, it doesn't matter whether you're Korea, India, Singapore, you're in Europe, or you're in US, everything is down, say, 28 to 40%. So people are understanding that we are still to see the full impact of what has happened. Uncertainty over how the lockdown. I mean, it's going to be a gradual withdrawal. It's not going to be like a complete unwinding. That seems to be a foregone conclusion. So we are still telling people not to kind of jump in lock, stock, and barrel. Watch it and spread out over the next 3 to 4 months.
Aashish, hi there. Good morning. Let's talk sectors. And, most of the key ratios seems to be signaling that FMCG could be the next cheerleader, the overall seasonality, the price ratio matrix, and all of that could really support the index. You've seen the way HUL has performed and currently is quoting at those hefty valuations as well. What's the outlook within this space? Do you see merit in consumption?
I think that right now, if you frankly ask me, right now it is more sentimental in nature, because it's more like hiding for cover and looking at what will outperform on a relative basis. But to assume, and also people know that there is some front loading of demand really, and I think the staples are the things which are being stocked up or which are actually being bought up. And those are the markets which are functioning. I mean, what is allowed, what is essential is groceries and those kinds of things. So the low ticket value items, even if there is disruption of demand, there is a general sense that things which are staples, which are low ticket value, even if for everything else there is down trading, at least this seems to be a place where you can hide for cover and you can imagine that it would be a relative outperformer. But you know what, when it becomes risk on, then what happens might be something very different. So I don't think any conclusions can be drawn out here right now.
What about pharma? The kind of activity that we're seeing there, it seems like that's a pocket that's now garnering all the attention. Just looking at my screen right now, and that seems to be the most active space. Cipla, Lupin, Sun Pharma, Cadila, DVs, you name it. Is this an interesting pack? Do you think that now pharma has got its mojo returning?
Yeah, so that's clearly a more different, or that's clearly something which is more in the sense trending rather than what we spoke about FMCG. My sense FMCG, like I said, is more like hiding for cover and looking for comfort. But on the other hand, pharma clearly seems to be something where people do believe that whether you discuss supply chains, whether you discuss relative to China, how India would be perceived, or you see, for example, the near-term spurt in demand, or people being a bit more careful and more health conscious, or administering drugs and those kind of things. So that long term as well as near term, on both the sides, there is something where people do think that there could be a change of trajectory or a change of trend, whether long term business prospects or near term business prospects. Also, let's keep in mind, for example, speaking to one of my colleagues yesterday, and he pointed out that the pharma index, even from the all-time high, is still about 35-40% below where it used to be. So while in the recent couple of months, maybe it's an outperformer for reasons which are obvious to us, but at the same time, it's not like there is some huge blowout that has happened. I think compared to where we might have found it, say about 2015 or so, from that time, it's still about 40% lower, and there is maybe headroom out there.
What's the sense that you're getting, Aashish, when it comes to the IT basket? Of course, there are a lot of headwinds there, but then you do have the currency that would be a bit supportive. What's it spelling out for the next quarter? Are you segregating when it comes to the mid caps vis-a-vis the small caps and large caps?
So we do have IT exposure, but bulk of it is actually large caps, and in a couple of cases maybe some niche kind of companies. So what we are understanding clearly is that anything on the large caps, we don't see any disruption at this point in time, because and there is no real if you see the revenue projections, or if you see the the way the businesses are being conducted, and all our conversations in the ecosystem, and nothing of that suggests that there is yet a reason to believe that there could be like a dramatic fall off. Yes, of course, some of the areas the revenue growth might be muted, but nothing to suggest that there's going to be like a big fall off the cliff. And at the same time, I think that's a trend which is going to continue. I don't think outsourcing, or I don't think any of the areas which the big IT companies are involved in, I don't think that is something where there is going to be a big trend change. Yes, there are sometimes that there is periods of slow growth or rapid growth, but none of it is getting disrupted. That's our sense.
All right, that's the take coming in. What about the kind of outlook that we have now on the metals basket? Do you think it's time for this pocket to shine? There has been a long beaten down phase that we've seen, and now there are signs of some sort of a revival kicking in. Where do you stand when it comes to metals, and I'm talking long term?
Yeah, I mean, in the long term, one has to see how things come out of this particular phase that we find ourselves in. So for one disclaimer clearly is that as a house, we never invest in any global commodities, and most of the metals do fall into that kind of space. So our exposure, frankly, not the right guy to comment, because our exposure at any point in time is practically nil. But having said that, I think the space where we are finding in as far as global economy is concerned, and the kind of scenario or the risk of mode that seems to be prevailing right now, at least for the near term, it doesn't look like prospects are improving. But I think at some point in time, when the dust settles, I think there could be better days ahead.
One can only hope, Aashish. Many thanks for taking time out and joining in, sharing with us your outlook on the equity markets. Almost 9,000 and tottering around that level, 3% higher for the broader end of the market, a very healthy breath, and pharma continues to steal the show. We'll slip into a short break right here. Stay with us for lots more when we return on ET Now.